Good morning. There's no green light, but I've been already informed there's a red light. My name is Bruce Summers, and I appreciate the introduction that Carlo provided for me this morning, and I'm pleased to have an opportunity to start our panel discussion today. I just wanted to amplify a little bit about my background. I have had time to found time to write on the subject of payment systems, but my principal background is that of a practitioner, having managed the national products of Fedwire and ACH in the U.S. for the Federal Reserve, served in a policy development position at the Board of Governors of the Federal Reserve in Washington, and then finally managing the consolidated technology operations of the 12 Federal Reserve banks. So my reasoning is principally inductive reasoning in terms of how I've gotten to conclusions about this topic. I want to start by providing some foundational analysis, and I'm referring 3 articles to you. The principal one by Carlo Trusoldi in a forthcoming book that we have coming out later this year. And Trusoldi's analysis basically establishes the grounding for discussion of payment systems in money and banking. Money is a store of value. Money is a medium of exchange, that is money at rest and money in transit. Also vividly points out that money is essentially today digital information, accounts, records and accounts. And finally, that consideration of payments needs to take account of a consumer's broadly considered individuals, businesses, and governments. The way I would put that is that it's not enough to look at the buying habits of consumers and coffee houses for purposes of designing the future payment system. The middle article by Summers and Wells provides examples, case studies, if you will, of immediate funds transfer payments for consumers in Mexico, Switzerland, South Africa, and the UK, simply to establish that this is a discussion of reality, not just theory. And then finally, my article on top has established or presents a general model for thinking about innovation in payment systems. I want to talk about demand-driven innovation to start, demand in the financial markets and demand in the consumer markets, and point out that there is market convergence. We usually talk about market convergence from the supply side. I think it's really important to consider market convergence from the demand side. On the financial and interbank markets, we have immediate funds transfer. RTGS is taken for granted today. And also importantly, complete and timely information on payments is important. So it's one thing for the payments to be completed. It's another thing for the parties to the payments to have complete information about the completion so that they can act on that. And in the consumer markets, again, emphasizing that we're talking about any pairing of payments between individuals, businesses, and corporations. Consumers also value immediate completion of digital transactions. And if those digital transactions are payments, then immediate completion translates in our vernacular in the payments system into timely or fast payments. Time unit of measure is seconds, not hours and minutes. And completion means finality. So what we're talking about is immediate funds transfer, immediate finality of consumer payments. And consumers, like businesses, demand full and timely information on their payments. Now, from the standpoint of the supply side responses to consumer demand, we have principles for guiding the supply side responses in the financial markets, the principles for financial market infrastructure. And key design elements of that supply response include networks that link all relevant deposit accounts. You can only have the timeliness and certainty if you have the linkage between all deposit accounts. In the consumer side, that means universal linkage among deposit accounts and banks. Business processes are defined by credit push and full information status. So the only way we can have an immediate and complete payment system for consumers is to adopt credit push as opposed to debit pull. And then we need financial technologies or applied technologies that optimize speed, security, reliability, and low cost. And here I'd like to emphasize low cost. I'll bring this up again in a moment. Low cost to the end consumer. In the interbank and financial market side, technical efficiency is very important. And we have RTGS systems providing a cost of production on a unit basis measured in pennies, 10 cents to send a Fed wire in the United States on the interbank side. On the consumer side, that wire transfer might cost $20, $25, $35, orders of magnitude more. So what we need is applied technologies that drive low cost that is passed on to the benefit of the end consumer. And I'm saying that the consumer market supply side innovation would be similar to that on the financial and interbank side. Key design elements for innovation in the payments markets centered around digital information records in accounts and universal linkage of the accounts in banks. The business process is credit transfer. It involves end-to-end completion and notification of payment. It's important to emphasize end-to-end is more than bank-to-bank. End-to-end is consumer to consumer, mobile phone to mobile phone, if you want to put it that way in practical terms, with immediate and final payments for consumers, just as we have for businesses today in the interbank markets. And finally, just a word about applied technologies. These should involve what I call industrial strength web technologies. The point being that so many of our technologies that we deploy today are what I would classify as recreational technologies. In designing payment systems, we need very robust technologies, industrial strength technologies to protect in an operational and security sense the integrity of payments. And finally, in this context, I would say that these payments need to be, and in fact are, mobile friendly. So a design that I would call immediate funds transfer provides for mobile friendly payments. The prerequisites to innovation in the digital age, based on research I've done, but also the case study of the United States in particular, points to strong payment system governance at the national and the currency zone level as the principal prerequisite for innovation in payments. It's not demand, the demand exists. It's not technologies, the technologies are within reach. We need to mobilize ourselves to cooperate as a community of banks and a community of suppliers to banks to be able to provide the designs and the clearing and settlement mechanism and the payment schemes to implement payments with vigorous competition then in the deployment of these schemes to consumers. So cooperation among stakeholders in planning and developing end-to-end, consumer-to-consumer payments, also the clearing and settlement infrastructure is key. This is an opportunity to reflect that innovation between, for example, the consumer and the merchant is not enough. So being able to have near-field communications to kind of expedite the purchase at the point of sale is not enough if you're handing off that payment to an antiquated back-end system where speed is defined in minutes or hours or even days still today. We need that speed that is defined in terms of time unit of measure of seconds. And just a coda from our case study, from my case study, the U.S. payment system lacks strong national governance and cooperation in far-sighted development of payment systems and clearing and settlement infrastructure. So there's no governance mechanism in the U.S. today that facilitates, if you will, the combination of technology to actually meet consumer demand. And I just want to observe that part of the inertia, if you will, holding back governance in a country like the U.S., but it's not only the U.S., is the threat to traditional business models. And in particular, something like immediate funds transfer for consumers and businesses poses a very severe threat to wire transfer businesses in banks, which are high generators of revenue. So we need a new culture, a new business model, if you will, that embraces and accepts innovation and that will substitute innovative payments for traditional payments, for the destruction of old business models, if you will, to make way for new business models. Thank you very much, and I'll look forward to the discussion on our panel. And also there's some contact information in the slide deck to provide an opportunity for continuing conversation bilaterally in case you have an interest in the topic. Carlo, thank you so much.
Okay, thank you, Bruce.